So good evening, everyone. I'm Professor Lavina Khilani. I'm Marketing and Strategic Management Professor. And with respect to the topic we took in the last class, which is about the stock market, I told you that this time we're going to learn about why industry analysis is important, why company analysis is important, and why competitive analysis is important. So today's session, let me just tell you, I really want every one of you to take away from this session should be that you know how to do a company analysis and industry analysis, because that becomes the basis for you to make your investment decisions. And when after my two sessions, there will be the classes which will tell you that based on industry and company analysis, how would you make the investment happen? And that would be taken by Professor Himanshu. So to begin with, just understand what exactly we mean by industry analysis and company analysis. Let me just play my slides here so it becomes easy for every one of you to understand what exactly we are diving into. So I'm unable to change. Next slide, please. All right. So looking at this, I really want every one of you to focus on certain aspects of it, because we want every one of you to look at the industry first, and then company, and then the competitive environment. And why are we moving in this particular sequence? The reason being, because when you look at the industry tells you whether it is attractive enough. It tells you the growth potential. It tells you that how the different companies would perform if the industry turns out to be attractive. Not necessarily, if you remember in the last session also we discussed about that if the industry is considered to be a lucrative investment option, maybe not all the companies within that industry turn out to be attractive as far as the investments are to be done. But yes, the industry analysis is important in some or the other way. Looking at it, because, there is a lot of market noises and you have to really find out and identify the economic engines. That means, what I mean by it is that you have to identify that which are those economic parameters and which are those, financial parameters which would actually make you understand whether this particular industry would give you benefits or not. Looking at this, if I give you one question, I think I'm audible to everyone. So I would like to make it as interactive as possible. So I have one question for you. So you answer that question and then let's get into the discussion. So if I give you 1 lakh, and if you have 1 lakh with you, what exactly would you look into before investing in the stock market? How would you look at the industry and how would you look at the company? Yeah, please let me know what exactly will you do. Please answer my question. How will you look into it? Are you straight away, if you come to know that the industry is performing well, maybe there are certain government initiatives being taken, the government has announced some kind of a scheme. So what would you do straightforward? Okay, so somebody says that I'm going to look at the financial position and returns of the company. Okay. What else comes in your mind? So definitely you're going to open up your trading app for that matter, if you know that there are some numbers which are attractive enough. Next, what you do? Will you really look at whether the stock is going up? Yes. If the industry turns out to be good for you, if the industry is attractive, you would look at the stock number as well. Agreed? We will look at the company's financial position, its cash reserves and loan revenues, net profit and demand of companies, products or demand in future. Right. Usually that's what we all do. We look at the trading, we open up our trading application, we try to find out what is the current stock price in the market. We'll also check the share prices. We'll look at the P/E ratio, as somebody said that I'm going to look at what is the financial position of the company. So definitely when I'm putting my money into business, it is very important for me to look at these economic parameters. Agreed. But see, when you are starting with a stock, it is not considered to be a wise decision. You should always start your investment from the perspective and from the bird's eye view, which gives you the complete idea about the business and a company. So usually what happens is what you all have given me as answers, that you would look at the BE ratio, the financial position, the numbers, the share prices. Usually this is the trend. But the recommendation is that before looking at these numbers, you should look at the business. When I say business, what business the company is into. Somebody mentioned about the debt levels. Agreed. So these are some of the parameters usually which are looked into. But if I do not understand what kind of a business the company is into, when I say business, I'm talking about its business model. How is it earning revenues? How is it earning profits? So that's one of the fundamental aspects to be looked into before coming on to these numbers, which you all just mentioned. You talked about the financial position, the balance sheet, the stock prices, the share market, trend, and so on, which should be the secondary option for you to look into. So you should look, maybe the share prices, they're rising from 500 to 550. Maybe you're just buying a tiny piece of the business. But it is very important for you to look into that what exactly this business looks like. So how is the business making money out of it? And what is happening to the industry in which the business operates? So I need to have a fundamental idea about the industry as a whole. And this is what this session is all about. So before we move further, just think about, if you have to pick up 3 to 4 names of the company from a particular industry, where would you invest in? And just let me know what kind of a business these 3 to 4 companies are into. How are they making money? Just to clarify and just to make it easier for you, let me just tell you that every business and every company has a different kind of a business model. When I say business model, it is the way through which the company earns profit. So for example, if you talk about Netflix, the way of earning profit is subscription model. If you talk about Paytm, maybe there are certain bank charges, bank collaborations through which you earn money. So there are different ways and models through which the business is earning profit. So there is a manufacturing company. So it is earning money because it is manufacturing and selling at a margin, right? So there are different ways through which the business is earning money. I really need to understand that which kind of a model fits into this business. Think about the companies where you would like to invest in, and let me know the reason of making that choice. Also, let me know which kind of a business model that particular business is into. Right? Every one of you, to please give me your answers. Okay. Can I see the answers, please? Okay. Sterling, because they are in solar, HDFC Bank. All right. Can I have 2, 3 names, please? More names. And meanwhile, without looking here and there, without even Googling it, just let me know which kind of a business model, right, do all these companies have? If you talk about Sterling, as they are in solar, HDFC Bank, Infosys. So, yes, mutual funds is a way of investment. So it's not a company basically, but you have to get into collaboration with some banks to use this kind of a service. So see, every company you're looking at, right? If you say HDFC Bank, you actually, how are they earning money? They're taking your money, they're charging interest on this, right? Maybe you're taking a loan, they're charging interest on this. Right? They're keeping your money in the bank accounts and they try to invest, maybe somebody mentioned here, mutual funds. So that's their way of putting your money into different sources. They allocate their money into different sources and they try to earn the profits on it. So there are different ways through which one particular company would be making money out of the business they are into, right? For example, somebody mentioned about the IT company like TCS. So one thing is very clear to us. We cannot just jump into the market. We cannot just jump into any kind of industry or business without knowing that what kind of a business they are into. So when you make your investments, right, you need to understand their business and their business model, that which are those streams through which the revenue is generated. So that is a very, very important question in mind. So yes, so that's what this is all about when you try to understand that what is the business model of the business, whether it is subscription or it is going to be a commission-based business model. It is, can I have the next slide, please? So there are different ways. So talking about the different kind of business model before I come to this. Now, if you think about a company like Zomato, because I would like to take it further with a lot of examples in place. So what does Zomato do, right? What is your answer to that? What does the company do basically? Yeah, food delivery. I was expecting, yes, food delivery. So now, if you say food delivery, how is Zomato making money out of this food delivery? It provides services and charges commission, right? So who actually pays to Zomato? That is a question in mind because that's a business model of the company. Does the customer pay? Think about it. Yeah, so I'm just giving you a few of the options. Just think about it. Does the customer pay? All right. Does the restaurant pay? That is my second option. Does the restaurant pay? Both sides pay. Okay. Does the delivery partner pay? Just think about it. Does advertising contribute anything here? Okay, yes. So I have few yes coming and few no coming to it. And that's where it really gets interesting for every one of us, right? So I have few of the answers like there is a collaboration between Zomato and restaurant. Yes, they both pay restaurant to get listed on it and the customers, they get the services in exchange of it. So now, if you talk about Zomato as a whole, it is a kind of a food delivery business. Of course, there are different ways through which the business is getting money. And you all have answered it correctly because you are connected with a restaurant. You're also connected with the platform. You're also getting the revenues because you have a lot of advertisements on it. So there are different ways through which the company is trying to earn money out of its business. Now, we know that there is just one single platform, but the money is coming from different places, or maybe there are different sources through which the money is coming in. Now, that's where the customers have to understand. Now, you would be like, I'm an investor. Why am I supposed to know where the money is coming from? Think about it from the investor's perspective. The perspective of the investor is very different. If one particular source of revenue earning stops for you, the another source is still open. Usually what companies they do is they never keep their eggs in the same basket. They want to have, the diversified portfolio. You want to put in different areas in the different portfolio, because if one is not getting you returns, I think the another option is open for you. So that's where you need to understand. If you have to earn money, you have to diversify your business models. And if you diversify your business models, the risk-bearing capacity of the business, if it is really high, the risk lowers down. And as a result, there is more probability and chances for you to get money from different options. So once you're very clear about where the money is coming from, so you can really identify if the market is booming, which kind of a market. Maybe the market in terms of, because the platform is connected with maybe, different restaurants. The platform is connected with maybe the advertisers. The platform maybe is connected with, the other parties in terms of commissions and so on. So see, the money is coming from different places. So once you are clear with this, So it becomes easy for you to identify what is going to be the margin. Now, coming to this, what I have shown you on the slide, there are different ways. For example, you have a razor test. For example, who pays for the funnel? You have high profit and high margin. So before coming to it, this is a very old example which is used in order to understand that, what kind of a business model is this. But before explaining that, what is business model can be identified from three perspectives. Number one, what does the customer pay for? And number two, what does the company earn from it? And number three, what does it cost the company to deliver it? So there are multiple options in front, right? I would go through it because that is the basic DNA of any kind of a business model. If you're able to answer these three questions, you know that that's how the business model is defined. I again repeat, if you're clear with the business model, you know where the money is coming from. And you know if there is any change in the market or maybe in the trend, how is it going to impact the different sources where the money is coming from? And that's how the companies take the decision. So it is important for every one of us, before making the investments, I need to know the business in which I will be investing in. And of course, the business which is a part of a particular industry. So now, the product itself, because usually what happens is when we try to understand a business, we say this is the product line the business is into. So the product alone does not tell you that whether the business is attractive or not. It's a very simple thing. The product does not tell you. So what exactly tells you whether the business is attractive? Can I have the answers here? My statement is the product alone does not do that for me. Then what is it? If it is not the product, then what is it? If it is not the product, then what it is? Now, you can just take an example of different companies. There are two companies who can sell something very similar in the market. So if that is not clear to everyone, let me just expand it further for you. Now, but they are making money completely different. Financial statements, okay? In what context the financial statements? Before coming to this point, I would again go back where I was talking about the cafes, the coffee business. Just think about it. Maybe they are into same kind of business. Maybe they serve the same kind of services, but still they are trying to make the money in a different way. Maybe there is a restaurant, like, what happens is, maybe you go to a cafe. Now, there is a business A which owns the cafe. Just think about any of the businesses, any of the examples, any of the cafes which you see around in your vicinity, and just think about it. If there is one cafe, maybe he has the employees, he owns the equipment, he pays the rent, and he sells the coffee in the market. So these are some of the things which he's doing because he wants to set up his business and earn money. Let me talk about another cafe, which is an independent cafe, and which is independent in terms of having its own app. I do not have a physical store, but I have just the application through which the coffee is sold, or maybe the other complementary or some kind of related items which are sold in the cafe. And it is taking the commission. Now, very simple question, which one in this case do you think requires more money when you want to set up your business? Which one do you think would require more money? Cafe 1, which has a physical outlet, paying, first option, of course. Yes. So maybe you have employees, right? You have to pay, salaries. You have to pay for the physical outlet. You have to pay the rent, right? So everybody is saying it's first. So of course, now this is your answer when I say number 1, which requires more capital. Now, if I ask you the second question related to the same business, which one can expand faster? Which one is going to be your answer? Is it going to be a first one, which is on a physical mode, which has a physical outlet? Or is it going to be a second one, which has its own application? Just think about it. In which case it is going to be easier for the business to expand? Think about it, because that's the way you will be earning your money. If you're able to expand your segment, if you're able to expand your market. Okay, so it is dependent on the execution first, can also expand faster, all right? So which kind of execution options you have in mind, Parth, if you say so? Because everybody said that it requires a lot of money, a lot of efforts when you have your physical outlets. You can definitely expand it if you have more money. But when I talk about the less money and less efforts to be made, then which becomes your lucrative option? Is it option number 1 or is it option number 2? Just think about it. Then in that case, it becomes second only, right? So see, what exactly I mean to say is that you don't have to just look at what is the business offering. And that's where we are doing an analysis. These two businesses are into the same product line. They have a similar kind of a business. But one is on a physical mode, the other one is doing online through its application. We need to understand where the efforts are less, right? But depending on the situation again, I'll go back to what Parth was saying earlier, but it depends on the situation, right? Sometimes having your own application and sometimes making your presence on the online platforms is easier and it gives you visibility and more profits. But on the other hand, sometimes depending on the market trends and depending on the marketing environment, the first option becomes more feasible, right? So definitely what is your market scenario will impact your decision making and your intelligence to make the investment in which kind of a business the company is in, and depending on the environment, whether I should be investing in the company or not. This is a very clear-cut mantra to understand how is the industry operating and how are the different businesses or how are the different companies in that particular industry are operating. Maybe, I think if you can recall, right, maybe there can be, a lot of potential seen in the industrial growth, right? It can be anything, like that's what we see in pharmacy nowadays, right? And as far as our last discussion is concerned, we also said everybody is talking about EV, but there is a drastic decline when it comes to the growth potential because still the infrastructure is not developed. Right, the country is still working on preparing the entire setup and the ecosystem, the EV ecosystem. So it needs time. Maybe there will be a time where this market is going to be very, very attractive for you. Somebody just mentioned about, but I think the cafe and all focus on the interiors and all because all can sell the coffee, but no one can sell the experience. Perfectly all right. But there's something which is known as convenience part, right? This is for everyone with me here. Stay connected. Please answer the questions as well, because everyone believes in convenience nowadays, right? You are at your freedom, you're at your ease, you're sitting in your office, you're in your workplace, at your workplace, right? It becomes convenient for you to make a placement of the orders and so on. So yes, even this kind of a format works really very well. Right? But yes, for the cafes, for the restaurants, the experience, the vibes, they really matter a lot to us. But yes, slowly and gradually, everything has changed. The entire ecosystem of giving the experience to the clients has changed, right? So now, of course, I really want to mention one thing more here. Usually what happens is when I asked you the first question, everyone, was trying to give me the answers in terms of what is the the profit earning ratio, or what is the financial statement speaking up about the company, or what is the balance sheet speaking up about the company. So these are some of the parameters everybody started talking about. But when we look at two important, terminologies in terms of revenue and profit, right? Can anyone just tell me what is the basic difference between revenue and profit? I really want every one of you to stay connected. and just let me know what is the basic difference between revenue and profit. Because revenue is not profit, right? Revenue is not profit. Mm-hmm. See, revenue in simple, revenue minus cost is equal to profit, is rather all thing to be made. Revenue is total, done, is not the total products we sold, and profit is we deduct after expenses. Rightly said. So revenue tells you basically that how much business has been generated, right? So it is telling you now the business has been generated. So if I'm selling something at a particular price, that becomes my business. But I have to really take into account what has been the costing. It does not tell me that how attractive the business is, and that needs to be found out. And this attractiveness definitely is found out when I know that how much profit is being generated. So don't look at the revenue, right, part only, but yes, the profit also has to be taken into account, right? So yes, again, going back to where you started from, we need to look into the financial statements. We need to look into the balance sheet, right? But it has to give you a proper idea about that it is not just the revenue part, but also the profit part, which is to be looked into. Maybe the business has a capability of generating a lot of revenue, but that does not mean that the business is attractive, right? Maybe it is coming up because of the large volumes, right? Maybe there is too much happening with the business, but when you look at the actual profit, that should not be missed. So these to be taken into account so that you understand that profit will reflect the actual status of your company. Now let's try and understand it in a very different way. Now, imagine you sell a product for rupees 100. Now, every one of you, I really want my participants to answer this question for me because it is going to ease down all kind of concepts which we are discussing, right? So there are revenue drivers, there are transaction based, if you look at it. Why am I saying it? Because, every time whenever we talk about Flipkart or DMart, they all have different kind of way to sell the product lines in the market. So coming back to this, and then I'll ask my question. Everyone is working in a different kind of a model. So DMart has a sale. It has sales in large volumes. But when you look at that, what is the model being followed? Maybe it is giving you everything at a low price. The pricing is low because DMart follows the EDLP model. That is everyday low pricing. Now, when you have everyday low pricing, you cannot afford to sell it at a high price because that's the way the company has been positioned in the mind of consumers. So what is DMart doing is, if I'm, just taking up an example of a water bottle for that matter. So if everyone is selling it to you at rupees 20, maybe DMart can afford to sell you at rupees 18. Reason being, when DMart is making a bulk purchase, right? Anyways, the costing of that particular commodity is coming below 20, maybe sometimes 18 or 17. And if, right, or maybe 15, right? Maybe assume it to be 15, so that it can afford to sell you at 16, 17, or 18, whatever profit margin it keeps with it. So there are different kind of models being followed, and that's the model of a DMart. Because there is volume purchase, so the cost, comes down, and as a result, this cost benefit ultimately is passed on to your consumers. So we know that there will be large consumer base. People are definitely going to buy, and this you must have seen with all kind of business models. You look at Flipkart, right? Again, this is a transaction-based model. You look at the relationship-based model, Netflix, right? Maybe it is a commission-based again because, the way subscription-based, I would say, it is a subscription-based model. Again, when you look at the different ways the costs have been defined, you have a heavy cost, fixed cost, and so on. So let's not get into this cost structure, but we should understand that there are certain things which are a part of your, variable costing and certain costs which are a part of your fixed costing. So when you calculate the variable costing and the fixed costing, so it gives you an idea that what is the probability of that business to earn money or to earn profit out of the business they are into. If there is a clarity of that probability, because if I talk about DMart, why did I mention that example is because it is a low cost model, but the customer base is very huge. And as a result, even with that small amount of profit margin, the company earns good amount of profit, right? So revenue is also high and the profit is also high, right? Because it has a large volume, large business volume. Now, coming back to my question here. Now, if you are selling a product for rupees 100, any point of time, how much do you think, right? If the transaction cost goes to 110, you're selling at rupees 100. Your entire costing is, say, for example, 120. But I think this example would come later once you understand the business model of this particular company. So let me just go to the next slide, sir, before I ask this question again, because otherwise it is going to confuse them. So forget about this particular question. Okay, so I would like you to go through these particular kind of business models first before I come to this question. Meanwhile, if you have any question in mind, please ask me. Not let it be a kind of one-way conversation. We are very clear with this. We have different kind of business models. It can be just subscription based, or it can be the asset light or asset heavy game. Any question you have in mind? Do you want to know anything which you would like to analyze about an industry or a company? Okay, you answer my question. How is Netflix making its money? Or how is Oyo making its money? Subscription. All right. How is Flipkart making its money? Okay. Commission as well as sales. All right. Okay. How is DMart making its money? So some of you said commission, some of you said sales, right? Both become the part of it. Okay, so it becomes a profit margin as well as sales. All right. How are the banks making money? That's a retail model for the previous question. Agreed. How are the banks making money? Okay, difference of interest. Okay, so are you trying to make a difference as far as your repo rate is concerned? And with what, right? Bank is making the investments. So the loan interest, and by investing the money in the market that people deposit. Okay. Okay, again, one question. If you feel that somewhere the government increased the repo rate, what is going to be the impact of the same when it comes to the bank's profitability, the way it is going to charge the interest, and the way the market is going to respond to it? So this is your analysis, basically. A very simple question. I'm talking about a repo rate. If the repo rate increases, what is the kind of impact you would see on banking industry? I hope you would understand the wrap. So can we just close it? Decline. Can we just go back and understand what exactly is happening? If the repo rate is increased or the repo rate is decreased, what is going to be the impact of the same? If the repo rate increases, the loan interest will increase and inflation will be decreased. Okay, so he has tried to understand the impact of the repo rate on the inflation. So see, I'm asking you to give me the impact because that's how you will be making your investments. If you see that the bank rates, right, are going high, maybe if the rates are high, the public, will they be interested in taking loans or money from the bank? This is again a question. If you think the rates are high, will you take the loan or money from the banks? No. If RBI increases the repo rate, then bank get the loan at higher interest. And then the customer gets a loan at a higher interest rate. Did somebody answer? And it's absolutely right. Now, why are we trying to understand this kind of a vicious cycle, basically? Because that is your industry analysis. Your industry is not working in isolation. Your industry is working with all the parameters, be it your economic parameters, social parameters, political parameters, which have a very crucial impact on how this entire ecosystem works. So if you talk about a banking industry, it has a very, you have to see that what is the progress expected. If there is good amount of money for the bank to keep with it, it has more potential to make the investments. And as a result, more potential to earn money, right? One option you can think about. Similarly, you talk about any other industry where the government releases some kind of incentives. I'm going to promote, maybe for example, the government says that in order to promote the exports, right, we will help you out. Maybe there are certain, small business houses, right? There are startups, the government is going to support. In this situation, you see what is the potential, what is the growth of that particular industry, and whether this particular growth will give you the return or not. So see, now we have shifted from one model to another model, right? One is your business understanding and the another one is your industry understanding. The industry is simply telling you one thing, that what is the growth expected? What is the growth expected in pharmaceutical? What is the growth expected in EV segment? Depending on the kind of infrastructure we have, or depending on whether we are able to build up our own APIs. So see, usually what we do is we import all the APIs, right? We are not in a position yet in India that we are, building everything up on our own, right? Yes, few of the things. Yeah. Just a second. So what exactly you want to understand here? Now, once this particular analysis is clear, right? This analysis will tell you that based on the business, based on the industry, whatever profitability and the rate of growth you see, that will make you understand whether the investment potential in that particular business is viable and attractive. Right? So that's what this, entire thing is all about. We are not working in isolation. We are looking at the business environment. We are trying to understand the economic environment, the political environment, all the social factors impacting it. And then finally, because when you look at the economic environment, see what kind of impact you have when there were numerous wars going on, when we were into the COVID situation. So this industrial growth, wherever you talk about, see, when you talk about the online platform during the COVID times, it had a very good pace and the growth rate was very high. So the investments with respect to these kind of platforms was high. So you invest, but still you have to be very, very clear about the growth potential of every business and every company. So that's what it is all about. If you have any questions in mind, please let me know. So somebody asked me, what is that we are talking about? Today, the topic is to understand number one, right? Your business models. Number two, to see how these business models are letting the company earn revenue and money. Number three, to analyze whether the industry has a growth potential. And number 4, to identify whether the companies within that industry have a growth potential or not. Depending on the number of years they have had in the industry, depending on, the kind of business model they follow. In some of the situations, maybe the online platforms, they really work well. In some of the situations, sometimes it is just the offline which plays a role, right? So you see the entire picture as a whole, and then finally you make your decision. If you have any questions, please stay connected with me, ask, let's have a discussion further. See what parameters to analyze. Now, that's what. So the industry would actually tell you, maybe you see some kind of a trend in the industry, right? I hope the industry trends are you must be aware of it. What are the industry trends? How the industry moves? What kind of changes the industry goes through? And are these changes sustainable or not? Right? We have to understand whether industry has the potential to sustain those kind of trends or changes. Every industry will go through a transition, but the transition in itself does not mean that it is going to give you good potential, good growth potential or not. So how much the technology is impacting the industry, whether your country, has the potential to take up the technology, incorporate that technology, use it. So for example, everyone is talking about artificial intelligence, right? But some of the companies, if you look at it, we all are using AI tools. But some of the companies, or majority of the companies who are using the AI tools, they really find it expensive to use it, right? So there is a trend which is going on. The industry is taking a transition. But adoption of AI in every company is not possible. Reason being because it is very costly, right? So we have to analyze this transition. We have to see how much is the adoption of technology, whether we have the capacity to take that technology adoption or not. Will we be able to sustain that adoption for a longer period of time or not? So these are some of the things which you are going to look into. See what is going to be the growth potential. And along with growth potential, we also have to see whether this growth is going to be sustainable or not. Right? Do we have any kind of a backup by the government? Right? Is this phase just you can say a temporary phase, or it is going to stay with us for long, as I was saying about sustainability? So these are all the parameters to be analyzed. You have to see basically that what is this industry all about, and whether it is giving you any chances or any attraction so that the investments can be done. How these investments will be done, you will be taking it up from the 4th session onwards. But we need to understand the attractiveness of the industry, right? We have to understand that what really makes this particular industry lucrative and a good investment option for us, right? Any more questions? Anyone? See, this industry analysis is very important because that tells you about not only about the industry, but also about the companies and the businesses they are into and their business models. And when you know that the company is into various business models, you also know that they're not keeping their egg in one basket. And as a result, if they're not able to earn profit from one option, the other options are open for them. So the risk is less. So everything as a whole is looked into before the investment is done. Any other questions? Yes. See, I have uploaded two things there on the Taxila website. If you look into, there is one, the pre-reading material, because it becomes easy for you to come back and discuss with me if you read that material. And plus, I also have uploaded the PPT, which, I might show you maybe in the session, or maybe I want you to come prepared on. It becomes easy for us to discuss. So you come prepared on that. Maybe in the next class, we're going to talk about the industrial frameworks, right? The market attractiveness. So that is going to be a next topic, which is going to be in continuation of what we understood today. I again repeat my point, every one of you, because whenever you are taking any decision, you cannot take the decision in isolation. There are so many factors revolving around your company, your industry, and your competitors. How much ahead the competitor is, and how much is the adoption of technology by your competitors. Also, let the consumers and the investors estimate your standing in the market, right? So in the next session, we are going to discuss about few of the frameworks which will make you understand in depth about this analysis. So if you have any more questions, you can ask me, and otherwise we'll meet in the next session. And do let me know also, you can also drop a message here if there is anything specific about the market, industry, or competition you would like me to pick up. Yes. So my next topic is going to be on the frameworks. So for example, I really want to see how attractive the market is. What is going to be the, the bargaining, what is the bargaining power of the buyer, the bargaining power of the suppliers, and how is it impacting the profitability of any business? The generic strategies the businesses they get into, the frameworks which decide, that how the business progresses and how the business earns money. Yes, please write down, okay? Put up the questions here, which we can take in the next session. Okay. All right. Okay, done. Of course, we can have a live market company analysis for the company. That's right. Definitely we'll do that maybe tomorrow in the class. Anything else related to whatever we have discussed today and the topic we have tomorrow? So whatever question you have in mind, let's do every kind of analysis, because when you move towards a financial analysis, at least you are thorough with the, the other kind of fundamental analysis which you can do about the market. Right? And these fundamental analysis, they are dependent on all the factors as I stated, right? Maybe your economic factors, your political factors, your social factors, your technological factors. We talked about the repo rate for that matter. We also took up an example of technology adoption. So, these kind of things. I will not be able to get into very much detail of it because we have limited time with us. But still, if you have any question and if any topic you want me to pick up, we'll definitely take that in the class. Or anything else with you? All right. So let's meet in the next class. Definitely there is a recommendation and a suggestion coming from the students, all the participants here, and we'll try to take up that in the next class. So meanwhile, you can all go through Taxila website. There is some reading material and PPT being uploaded there, and just go through it, and let's have a discussion tomorrow again, back at 5 o'clock tomorrow. All right. Thank you so much. Let's meet tomorrow again.